If you've spent any time in the crypto market recently, you know it's just a nonstop fire hose of information.
It really is.
You've got these institutional giants on one side, and then, tokens named after household pets on the other.
Yeah.
What if a project managed to be both at the same time?
That fascinating contradiction is precisely why we're doing this deep dive today.
Okay.
We're unpacking the story of TOSHI, which is this token that, well, it started as a joke, and now it's serving as the unofficial mascot of the Coinbase-backed Base blockchain. And that comes with high stakes.
So our mission here is to really understand that evolution, because the premise is, frankly, a little absurd.
It is.
This project is named after Brian Armstrong's cat, TOSHI, while also being a pretty clear nod to Satoshi Nakamoto.
It marries that whimsical meme culture with a really serious, almost institutional ambition of building essential infrastructure on a layer 2.
And for this, we've looked at market data, we've gone through their development roadmaps, and maybe most importantly, some critical regulatory statements from the US SEC.
We need to figure out how TOSHI managed that shift from, pure speculation to what they call a utility hybrid.
And explore the surprising legal tightrope walk that comes with actually building that utility successfully.
Exactly.
Okay, so let's unpack this. When you hear Catcoin, your first thought is just pure speculation.
Of course.
But the foundation of TOSHI is actually deeply, deeply tethered to its institutional home.
And what's essential to recognize here is the very careful construction of this brand narrative.
Yeah.
Yes, the cat connection is front and center, but the legitimacy goes deeper.
How so?
Before it was the Coinbase wallet that we all know, it was just called TOSHI.
Ah, okay.
So by adopting that name, the token immediately links itself into the historical narrative of the Coinbase ecosystem itself.
Mm-hmm.
It's not just some random internet meme. It has this context within a major exchange's own lineage.
And that lineage leads us directly to the Base network, which is the technical home for TOSHI. This wasn't just a choice of network, it was the entire strategic foundation.
Absolutely. Base is a layer 2 scaling solution for Ethereum, developed by Coinbase. It's built using the open source OP stack, which is basically a standardized set of tools.
Right.
And that allows for super fast transactions and incredibly low fees, bypassing all the congestion and, the high costs that plague the Ethereum mainnet.
And Base's success is really the tide that is lifting TOSHI. I mean, we need to emphasize just how dominant Base became in such a short period. This wasn't slow, steady growth.
No, it was a massive land grab. The growth just speaks to the power of that institutional funnel.
So what are the numbers?
By October 2025, Base had reached a peak total value locked or TVL of $5.6 billion.
Wow.
And to give you context, that represented a staggering 46.6% of all layer 2 DeFi TVL.
Wait, 46.6%, so almost half the market.
Almost half.
Does that kind of institutional backing, being anchored to Coinbase, also bring a specific kind of institutional control that maybe undercuts the whole decentralized nature TOSHI is aiming for?
That's the core tension, right? Base provides the stability, the user funnel, the lightning fast environment. Essentially, the professional, institutionally sanctioned plumbing.
And TOSHI sits on top of that.
TOSHI then positions itself as the high beta, high risk leverage layer on top. So if Base succeeds, TOSHI is built to capture that massive wave of user adoption.
Okay, so the foundation is set by a centralized exchange's L2. Let's talk about the structure of the token itself. Tokenomics are so critical for establishing trust, especially in the meme space.
Transparency was paramount. They knew they had to attract risk-aware holders. They set the float supply at 420.69 billion tokens.
A clear wink to the culture.
A very clear wink, but the launch mechanism was stringent. There was no pre-sale, and critically, no dedicated team allocation.
That's huge.
That structure ensured 100% community ownership from day one, which is an immediate signal against the typical insider dumps you see in pump and dump coins.
Right, which sets the stage for the big strategic pivot. The question is, how does a meme coin attract developers and justify this valuation? That brings us to their move into building utility.
Exactly. The shift from just pure speculation to functional tools is the true narrative here for long-term viability. They didn't just talk about it, they created a whole suite of applications.
TOSHI tools.
TOSHI tools, yeah. Designed to fill these infrastructural gaps in the new Base ecosystem.
And the centerpiece of that whole effort is TOSHI Mart. It's designed to be the gateway for new projects.
TOSHI Mart is essentially a simplified, one-click social launchpad and trading platform, and it's built specifically for Base.
The goal being to lower the barrier to entry.
Dramatically lower the technical barriers. If you're a developer and you want to launch a token on Base, they want TOSHI Mart to be the absolute easiest, safest place to do it.
But the Mart needs traffic and projects need incentives. So they built this mechanism. They call it the flywheel integration.
That was a really smart structural move back in August 2025. Here is how it works.
Okay.
Projects launching through the Mart can choose to use either TOSHI or ETH to fund their initial liquidity pools.
Right.
Now, when users trade on the platform, they pay a small liquidity provider, or LP, fee. 50% of those fees are then distributed directly to the developers who launch the projects.
Oh, interesting. So if I'm a developer, I'm incentivized to use TOSHI Mart and use TOSHI liquidity because the platform shares its revenue back with me.
It directly ties your success to the value proposition of the token.
That's the flywheel.
That's the flywheel. It creates this perpetual loop. More new projects launch, more fees are generated, which attracts more developers, which increases demand for the TOSHI token itself.
But beyond just attracting new projects, they had to deal with the elephant in the room. Security risks, rug pulls, all that.
Right. And technical complexity. Two advanced features stand out here.
And they were built specifically to tackle these endemic crypto risks.
They realized that for the ecosystem to trust them, they needed verifiable guarantees. So they implemented the locker system. It's essentially a verifiable smart contract escrow.
It provides proof that developers have locked their liquidity or their team tokens for a set period.
Exactly. So they can't just run away with the funds. It prevents a rug pull.
So that's the risk side. What about the technical efficiency side, which is so crucial for things like airdrops and community management?
That's where the multi-sender tool comes in. If a project wants to do a massive airdrop, distributing tokens or NFTs to thousands of addresses manually is incredibly time-consuming and expensive.
The gas fees alone would be a nightmare.
A total nightmare. The multi-sender lets you do a batch distribution to multiple addresses in one single, highly efficient transaction. It's a crucial utility for scaling community rewards.
So they successfully built these digital tools. They've created an internal economy, but this all needs robust management. How did they try to institutionalize community management?
Through the MEOW-DAO, a decentralized autonomous organization.
Okay.
The governance transition is following a 4-phase plan. The goal is full community governance by 2026, and it operates on a one-token, one-vote model.
But pure DAOs can be really slow, sometimes disorganized. I find the TOSHI Council structure interesting because it seems like a way to stay agile while still decentralizing.
It's the necessary check. The TOSHI Council is designed to empower trusted contributors with a dedicated budget to lead specific, technically demanding initiatives.
So it balances things out.
It balances the slow, consensus-driven pace of the full DAO with the need for a focus group that can actually execute complex technical upgrades.
So it seems like they've successfully governed their digital tools, but now they're setting their sights on something far grander and far more difficult.
Physical infrastructure. This is where the ambition just goes off the charts.
It's a huge leap.
This is the leap into what's called DEPEND, or decentralized physical infrastructure networks. Their ambition led to a partnership with World Mobile in July 2025.
To launch TOSHI Mobile.
TOSHI Mobile, which is a decentralized mobile virtual network operator, or MVNO.
Decentralized cell phone carrier. Powered by a cat meme coin. It sounds great on paper, but we know DEPEND is incredibly complex.
It is.
It requires hardware, logistics. How realistic is TOSHI Mobile's execution, really, given the core team is mainly focused on a trading launchpad?
The realism is the high-stakes test.
Yeah.
By aligning with a major player like World Mobile, they are trying to immediately gain a foothold in actual connectivity services.
And the token is used for payments.
Crucially, yes. The TOSHI token is slated to be used for payments within this decentralized mobile service. This moves the token from being just digital currency to something that, pays your phone bill.
That is a massive operational lift. And they also doubled down on the meme culture by blending it with tech, right?
Yes. Through their partnership with RealGo in December 2025, they introduced TOSHI as an interactive collectible AR character in an augmented reality game.
So you're out in the real world hunting for this thing.
It encourages physical exploration, shared humor, collecting. It blends the speculative fun with real-world activity. It's wild to think that someone's main interaction with the decentralized mobile network might be by hunting a virtual cat in augmented reality.
That blend of high-tech and absolute absurdity really does define this space.
It really does.
Okay, so we have a project that began as a collector's joke, but now it manages a technical launch pad, it governs a developer economy, and it's backing a decentralized telecom provider.
That's right.
What does all this real-world utility mean for the regulatory landscape? This is the core paradox.
This is where we hit the aha moment.
Yeah.
We have to look at the guidance released by the SEC Division of Corporation Finance in February 2025.
Okay.
They stated that typical meme coins are generally not securities. And why? Because they fail the Howey test.
Which prong of the Howey test is the most relevant here?
The fourth prong, which requires an expectation of profit derived from the entrepreneurial or managerial efforts of others.
Right.
Typical meme coins fail this because their value is driven purely by market sentiment, collective speculation. It's like trading baseball cards. If Dogecoin goes up, it's because the market decided to pump it.
There's no central team whose successful operations you are relying on for your profit.
Exactly. But now look at TOSHI.
They launched TOSHI Mart, which needs constant maintenance. They're building TOSHI Mobile, a depend project that needs technical execution. They formed a TOSHI council specifically to lead these complex managerial projects.
Precisely. That is the tightrope walk. By building utility, by undertaking verifiable, significant managerial efforts that the community relies on for the ecosystem's growth, TOSHI risks creating that exact expectation of profit.
Derived from the efforts of others?
Derived from the efforts of others.
So if the value of the token is now reasonably expected to come from the TOSHI Council successfully launching a mobile network or fixing bugs in the locker system, that looks an awful lot like the fourth prong of the Howey test is now being met.
And that tiny distinction is the legal cliff. Commissioner Crenshaw highlighted this tension in her dissent. She argued that any token promising massive ecosystem expansions and technical integrations,
regardless of its meme origins.
Right. It functionally resembles a security because users are buying into a business plan managed by others.
So the more successful they are at becoming essential-based infrastructure, the higher the legal risk that they get classified as a security.
And subjected to the full weight of federal financial regulation, utility becomes a regulatory liability.
It almost creates a disincentive to innovate.
That inherent tension between decentralization and managerial responsibility defines TOSHI's entire trajectory.
That is a stunning level of complexity for a cat coin.
Right.
Okay, let's pivot to the market context because despite all this, TOSHI is still a brutally high-risk asset.
Oh, absolutely. It remains volatile. We saw a meteoric rise to an all-time high of about $0.002 in January 2025.
Right.
But the subsequent correction was brutal. The price dropped over 70% in the following quarter. That's characteristic of a high beta asset tied to the success of a major L2.
And you see this constant tug of war between two very distinct types of holders. You have the long-term believers, and then you have the short-term speculators.
The bullish accumulation signals are clear. Data shows over 31% of the supply is held by fresh wallets,
which indicates a strong recent commitment to long-term holding.
Right. Plus, the project has secured major listings on exchanges like Upbit, Bithum, and Binance Futures.
But those futures listings, they introduce their own high-stakes risk, don't they? Especially with the high leverage available.
Indeed. When an asset like this is on Binance Futures with up to 75x leverage, it means derivative traders are completely disconnected from the long-term utility roadmap.
They're just betting on short-term price swings.
Purely. And this high leverage amplifies bearish sentiment. It leads to massive derivative-driven swings like the 10.7% daily drops we've seen when broader market fear hits. And those swings damage the stability you need for serious utility development.
So to really understand TOSHI's position, we have to compare it to the established giants. Shiba Inu, the utility ecosystem veteran, and then Pepe Coin, the pure meme.
Shiba Inu, or SHIB, represents maturity and an entrenched community. It has a vastly larger, more organized community. We're talking nearly 4 million followers on X. SHIB has spent years building its own L2 Shibarium and establishing real-world utility through merchant acceptance with platforms like BitPay.
So SHIB is the more developed, proven candidate, though still volatile.
Exactly. And then you have PPE.
The total antithesis of utility.
PPE is purely viral sentiment. It intentionally lacks a formal development team or a roadmap. Its smaller community, about 500,000 on X, relies entirely on viral hype.
The definition of high-risk, high-reward speculation.
It's the definition.
So TOSHI sits right in the middle as the true hybrid.
Exactly. TOSHI is attempting to skip that multi-year struggle of building its own layer 2 by just leveraging Base's institutional momentum from Coinbase.
Right.
It integrates utility quickly, positioning itself as this high-stakes institutional ecosystem experiment, a middle ground that wants the community engagement of a meme coin, but with the functionality of a serious DeFi player.
This has been a critical deep dive. We've watched a project evolve from, well, a reference to a cat to a decentralized telecom provider.
It's quite a journey.
And what we've really uncovered is that TOSHI is a key case study in modern crypto evolution. It demonstrates that you cannot judge a token by its logo, but by the weight and, I guess, the regulatory risk of the infrastructure it is attempting to manage.
When you look at TOSHI, you're observing a critical test case for the entire crypto industry.
Which is?
How far can decentralization push into regulated physical and financial services before the Howey test just demands accountability?
So the ultimate test for this entire ecosystem isn't market hype, it's internal execution under the pressure of utility.
Right.
The final phase of the MEOW DAO governance is set for 2026. Can a fully decentralized, consensus-driven community effectively manage the technical execution risks of all this complex infrastructure? A launchpad, a developer flywheel, a decentralized mobile network.
Or will the sheer weight of that utility and the inevitable demand for professional management that comes with it crush the community's capacity to govern?
Leaving its future uncertain.
That is the defining tension. And it will dictate whether TOSHI remains a joke or actually becomes a foundation.